Hello, this is Stephen Whitfield with Drilling Contractor. Today I'll be speaking with John Spears, president of Spears & Associates, about his take on where the U.S. onshore drilling sector is headed next year as it tries to recover from the oil price downturn sparked by, among other things, the COVID-19 pandemic. Mr. Spears, thank you very much for joining me today.
Glad to be here, Stephen.
My first question is pretty general. How would you describe the economic landscape for drilling contractors focused on U.S. land right now? What should drillers expect in the coming year? And is there anything that could potentially give drilling contractors an advantage in this market?
Well, I suppose I could start with the bad news first, right? Q3 2020 will be probably the worst quarter that many of these firms have had. We're about to get the public companies reporting their results, and I'm sure they'll show activity at just about its lowest point. Rig count hit a bottom during the third quarter. So low activity, weekend prices, tough to find a paying customer, that kind of thing. But the good news, I think, would be that from this point forward, we would expect that activity will begin a slow climb. And so drilling contractors have that to look forward to as the rest of 2020 and as 2021 unfolds. I think we'll be in an environment where oil prices stay around $40 a barrel. So that's not going to put a lot more rigs into the field, but I think there'll be some operators who, because of the acreage they hold that has low break-even points, because they have good balance sheets and so forth. I think they'll begin to put a little money to work that's been on the sidelines while everybody's sort of been waiting for the dust to settle to see where things are going. And of course, we have an election unfolding, and I'm sure there's the uncertainty around that has also caused some folks to be cautious. So regardless of how the election goes, I think just removing some uncertainty there will help pull some money back into the market. And so it's going to be better from this point going forward for operators, or for drilling, operators and drilling contractors. But it's going to be a slow go. It's not going to be a quick recovery at all, I think.
Now, as you noted, WTI has been hovering around the low 40s, and it's around the low 40s as we record this. At what price point do you think WTI needs to reach before we see any noticeable increase in onshore drilling activity? And how long do you think it'll take for us to get there?
Well, good points there. Yeah, I suspect that. So our outlook is that we'll probably be getting close to the $50 a barrel mark by the end of 2021, and then maybe somewhere toward the $60 mark toward the end of 2022. I think we have to get to around $50 before we begin to see, money coming, CapEx budgets noticeably increasing, and money coming into the industry and rig count beginning to accelerate. It's not just a question, though, of what the price of oil is, because, again, we have to remember that operators in this industry are in a different environment. There's real requirements on them to deliver money to repay creditors and improve the returns to shareholders. And so a lot of the free cash flow that in the past went primarily to drill new wells, a big portion of that, I think, is going to have to go to the financial community. And we're probably, as an industry, 2 years into a process of rebuilding the credit worthiness and the economic attractiveness of the oil patch, or the upstream part of the oil patch. So oil prices may be rising, and which is a good thing, but because there'll be a larger share of the free cash flow going to pay back debtors and equity owners, that's going to mean that money available for CapEx and rig count and so forth will only sort of slowly recover. So it's a two-step process: oil prices rising and creditworthiness being reestablished. And all that, I think, means that it's probably 2022 before both of those come together. A high enough oil price and a satisfactory credit situation on the part of operators. And then we can begin to see more money being spent, more rigs put to work.
Do you see any basins that can stay profitable if oil price stays at or around its current level? What are some basins that we need to be looking out for in terms of a potential earlier recovery?
Yeah, well, it's interesting that as oil prices have fallen, the Permian Basin has continued to account for about half of all the rigs that are running. So I think you have to point to the Permian as if you're just talking about an entire basin, as being one that's probably got an advantage when it comes to profitability at these kind of oil prices, $40 a barrel of oil prices. Now, every basin will have a sweet spot in it that's probably good at even a $40 price. But if we're thinking across a whole basin, then the Permian is the one that comes to my mind as being probably the most advantaged at this point to offer profitable opportunities to operators who are drilling. The other thing too is that it may be if the Permian has 50% of the rigs, it may be not just because the prospects are profitable, but also because the operators who are working there tend to have better than average balance sheets, lower leverage, and so forth. So that is a factor as well when it comes to where activity will hold the best and might grow the most. I think there are some areas that are worrisome in regard to your question. So the Mid-Continent is an area that has a lot of different formations, but because of their size, which is relatively small in the grand scheme of things, they tend to carry high break-even points. And so that's an area that I think is going to struggle if we see oil prices stay around where they are today. The Bakken's another area that has had an awful lot of its best prospects drilled up, and the ones that are left to be drilled, I think, tend to carry higher than average break-even points. So that's another area that may be lagging and in recovery and really dependent upon a higher oil price to see rig count accelerate from the levels we're seeing today. So the Permian's in a pretty decent shape, but some of these other areas have their own problems, I think, over the next couple of years. Or they're very price dependent in terms of an activity recovery.
Well, Mr. Spears, thanks again for providing our readers with some valuable insight into U.S. onshore drilling. We really appreciate it.
Thank you very much. It's been fun. Hope to do it again.
And thank you very much for visiting Drilling Contractor. Please be sure to check out our print issue for a feature story looking into the forecast for U.S. land drilling in 2021. Also, make sure to download our digital edition for additional coverage on this and other topics. And please visit drillingcontractor.org for the latest news and insights from around the industry.